Thank you. All right. Thanks for having me. This is exciting. Got a bunch of new faces out here. Just quickly before I start, by a show of hands, how many people here have been involved in real estate development or new ground-up construction in the past? A couple? Okay, great. And how many people want to get into the real estate development space? You see the opportunity, maybe you've got some properties. All right. Awesome. So I've structured this presentation as more of an introduction. I'm going to talk a little bit about what we do, why we got into development, and why now is the optimal time to get into this line of work. We'll cover why real estate, why develop real estate to begin with, and why now is a great time, and probably why you shouldn't develop real estate. And then we're going to tell you how to get started. So let's dive into this.
Oh, that's cool.
Thanks, my assistant did that.
Yeah, that was great.
Yeah.
I'm excited to see what the next one is.
That's it. That's the peak. I'm just going to close the laptop now. So some background on myself. I'm a licensed architect. I've been designing and building real estate for over a decade now. In 2022, I got frustrated with my developer clients who insisted on going bottom dollar, creating these micro units, places that people hated, didn't want to live in, but they would sell it for $1,400 a square foot. And I said, you know what, I've had enough. You're not listening to me. You're not treating me with the respect that I think I deserve. And why don't I just learn what you do? I'm doing 90% of your job. Why can't I learn the other 10%? So I've since I met up with my business partners. We started coaching under a prominent developer. And then in 2022, we officially formed and started underwriting projects. It's been slow. The peak of the market in 2022, nothing was really working, but things have changed. So that leads to the question that we all asked is, why develop real estate? And there's a few things that really appealed to us. So the value creation at multiple stages. You wanted to know about forced appreciation. That's literally what we do. We take an empty plot of land or a derelict building nobody wants to touch, and we get it at bottom dollar because it doesn't have any perceived value. And then we create something that people want, something that will generate income, something that we can sell to another investor who will also generate income. We essentially are creating the Class A products that will last for decades. That then there's kind of like a down cycle where 5 years later a REIT, we'll sell it off to a REIT. They'll hold it for cash flow, then they'll sell it to a high net worth investor who will then have to do some maintenance, get it back to its original state, and they'll hold it for some time. And then as the building degrades, it shifts from Class A to B to C to D, and then a value-add investor comes, renovates it, turns it back into a Class A or B, and the cycle starts again. So that's what development is. It creates superior returns because we are doing such a huge appreciation, a huge value add, so to speak. It also acts as an inflation hedge, and it's a tangible asset that you can hold. So when all costs are rising, we all know as real estate investors, values of our real estate go up. It tracks that inflation. Development does that, and it gets built into our model. It's a tangible asset, never going to go to zero. We have greater control over the outcomes, so we get to decide what kind of building we're going to build. Is it going to be multifamily residential? Are we more in a commercial district? Or do we want to do an industrial park? We get to decide what the business case is for the area. It's all dependent on our execution. We have that control. We're not giving our money to the stock market and then playing, roller coaster ride. We know the business case, we know the market, and we design to it. And that creates an impact on the society, the local community, and it creates an alignment of values because the municipality, they kind of dictate where they want to see development happening. They want to dictate, okay, where are my commercial districts, where are my employment districts, and then we have to build to that. We can try and change things through an official plan amendment, zoning bylaw amendment, but ultimately we're working with them to create value for the communities where we work. So this is an example. This is one of our recent projects. We bought this 2-acre lot. It's about 30 minutes south of Ottawa. We bought it for the price of a home in Toronto, $930,000. It was, yeah, underused site. It was used for commercial storage, a contractor yard, in the middle of a residential neighborhood. Nobody wanted it. People hated looking at it. So we basically turned it into this. So this is going to be a 52-unit stacked townhouse community. We've got 2 blocks of 26 units each. Each block has 13 2-level, 3-bedroom townhouses with a 1-bedroom accessory dwelling unit, 66 parking spaces. There's going to be a playground in the middle. Really perfect for this residential area in a town that desperately needs rental supply. Their vacancy is close to 0. Wow. We met with the mayor and she's like, please build rentals, we need it. So high demand for rentals, family style units. It raises property values in the entire area. It's better for the community. Once complete, the projected value is going to be around $24 million and generates about $7.7 million in profit for ourselves and our investors. Now there are multiple strategies, an exit plan, which Andrea mentioned in her presentation. You do need to think about how you are exiting, and development has a wide range of avenues you can take. We bought the land, we got it rezoned, but you could literally buy a plot of land and hold it for 10 years. As soon as the municipality brings sewers to your property, boom, your land value triples. Because that's a huge undertaking. No one can build a multifamily residential complex without tying into municipal sewers. So if you know where your community is growing, that's a strategy people use. They'll buy up farmland knowing that a city or a town is going to annex that land eventually in 5 to 7 years. And then they'll sell it to a developer and make 3 times their money. The developer will build on it, make 3 times their money. And this is the chain. So land appreciation, improvements to the existing site. So those improvements I mentioned, like this, bringing in the sewer, bringing hydro, that improves the land value. Entitlements. So this is your approvals. If you are taking the project and it's in the official plan, which is like the municipality's designated, what they want to see built there, you take the agricultural land and you get that changed to commercial land. Agriculture is like your baseline, all you can do is farm. You change it to commercial, there's a huge amount of new industry that can come, new investment that can come. Your land has just increased in value. Same thing goes with a zoning bylaw amendment, or going through site plan, going through permits. Each one of these steps eliminates a potential risk for a developer and increases the potential for the project to earn income and create new economic wealth. After that, you can build it. You can build the project and then sell it. You can build it, hold it, sell it. Lots of different ways you can do it. You can lease it. You can do promissory notes. Like you can leverage it. There's lots you can do with real estate, and development has a lot of different avenues you can explore. So why is now the best time to build? It might seem counterintuitive. We hear the reports constantly on the CBC if you watch. Economy's down, Canada's in trouble, recession, construction starts are down. I hear that and I see opportunity. I see potential for growth. We're finally hitting the reset button. We've got policy changes across all 3 levels of government, federal, provincial, municipal, urging people to build. And yet all the big developers are stuck with all these unsold condo units, projects that are just coming online. A lot of them are going belly up. So who's going to be building these units when we have a massive shortage, right? This is what we needed to build. That red line, we want to build 1.5 million homes. That's the red line we need. The green line, that's pretty much the baseline to keep up with current demand, and that blue line that's taken a sharp nosedive, that's actually where we are now. In fact, first half of 2025 starts were 25% lower than the same time last year. I think we had last year, the target was 150,000 per year, and we're at 86,000. So we've got this situation where we've still got demand. Demand is still there. We've closed the doors on immigration, closed the doors on foreign workers, closed the door on foreign students for now, but we will have to open those doors eventually. People here still need a place to live, and they need somewhere affordable. And the pressures to continue to try and bring down prices and build more units, but no one's doing it. So who's going to step up? I will. So these are just some of the recent policy changes over the last 5 years. The most recent one is the Build Canada Homes that Carney announced. That one's very exciting because it opens up the door to something that we're actually exploring, which is modular construction. I won't get into that for this presentation, but it's going to be the next big thing in construction, I think. Maybe I'll talk about it another time. Construction costs, which have been on a steep rise for the last decade. This graph here on the top kind of shows you where the costs are going, and on the bottom, this is the rate of change. So you can see back in 2022, costs were going up at a rate of 17.6%. Right now, we're down to 4.2%. So as these developers start canceling projects, putting things on hold, all the trades who are charging up the nose now suddenly find themselves competing for work. Finally, our costs are coming down. We're not quite there, but it's coming. So if you can plan, a development will take time. You have to get the land, you have to put the plans together, get your applications together. During that span, I expect we'll continue to see prices go down, and there's going to be that optimal window where it's really affordable to build. You're first in the market, and then things will start to pick up as our economy eventually will turn around. So with that said, that sounds great. Sam, how do I get started? Well, put the brakes on. Here's some reasons why you probably shouldn't get into real estate development. It's extremely capital intensive and cash flow hungry. All right. All that work I mentioned about the entitlements, property under contract, getting that land costs money, and you don't have a cash flowing asset for years. So you need a lot of money in the bank to kind of carry that. Unless you're a really good negotiator, we like to partner with the landowners. We create deals like vendor take-back agreements, long conditional periods, which I'll go into, that kind of reduce the amount of upfront cash outlays. But it's very capital intensive, and it's very complex. There are a lot of moving parts, and that builds on layers of risk. So if you really, my mentor once said, you don't know what you don't know, and that's what's going to kill you. So that's why you can get into trouble because you didn't know something, whether it was something about your land, whether it was something about the construction process, or even something about your partners on the project. Everything has to be scrutinized, detailed, planned for. Otherwise, you're leaving yourself open to risk, and there is a huge amount of risk. You're signing on the loan. The bank is going to come after you. You're likely raising capital from investors. If you lose all their money, they'll probably come after you, and it won't feel too good losing other people's money. Now, development has longer timelines, low liquidity up front, so it's very difficult to get your money out. If you're halfway through site plan approval and you got this empty lot and you run out of cash, you're not going to sell that with the site plan approved. That value appreciation that would get you your profit hasn't been realized. So you run out of cash midway through, you're stuck, and you're going to have to sell for a loss. And then you're subjected to regulatory and political headwinds. It's a constantly changing landscape. CMHC is brutal for it. They decided out of the blue to double their premiums. On one of our projects, it added almost $500,000 to the building cost just because they felt like it. Still the best rates in town, but man, it sucks that the end user is going to have to pay for that to make the project work, right? So these are the things you have to keep tabs on because it's a very quickly changing landscape, mostly for the better these days, but people in power often, there's a disconnect from what they're looking at versus what's actually happening for developers on the ground. It's also execution heavy. Success hinges on your team and your partners actually getting the job done. So how do you get started? My mentor said go big. I disagree. I think you got to start small. This was one of our first projects. It's a custom cabin up in the woods in Quebec. We built this. My partner pretty much bootstrapped it, and we used it as a short-term rental. The land cost was amazing because it was in the middle of nowhere. $22,000 for the land on like a couple acre site. We built it for about $300,000, and then we recently sold it at just under $500K. It was generating $60,000 a year in NOI, and we realized an annual rate of return of about 20%. Successful, stressful. The locals did not like big city or Ontarians coming up to Quebec and doing work out there, so it was difficult finding trades and lining them up and getting the work done, but it worked out, and this kind of led to our next few projects. So we've built a few triplexes. The one on the right there, it was a custom home build with 2 accessory units. That one had its own challenges, but the land was bought for $450,000. We put about $1.3 million into it, and then it was reappraised at 2.1, so a little bit of equity there. And then it's cash flowing, generating about $111,000 a year, and that's close to a 20% return, annualized return. This other triplex is actually here in Guelph. That one I did for a client. We then did a 6-unit multiplex conversion. So we took a single family home. We kept the structure, but divided up, created 2 units out of the initial home, added a second story, and then in the back we added 3 more 4-bedroom units in the back, and it's a deep lot, so there's parking. So this one, the land was bought for $324. Put about 1.5 into it, and it reappraised at 2.5. So there's quite a bit of equity in that one. That generates about $150,000 in net operating income, and again, another close to 20% annualized rate of return. So now, since with that under our belt, and a very strong team who've been building a lot of big things, we decided to go bigger. So I mentioned the stacked townhouse project. We've got 2 other apartments, one in more central Ottawa, and another one that we're putting together here in Toronto. Now that you can go 6 stories on major streets, there's opportunity there. Big value add. Take a $1 million home and put a 60-unit apartment on it. So some advice if you're going to get into this, focus on building your team. Your core team members, your real estate broker and agent, they must have development experience. They must have ties to the community where you're looking, and deep relationships with trades, suppliers, politicians, municipal experts. That goes a very long way, especially when you're negotiating a property and you're trying to evaluate whether it's suitable. They will be the person that you lean on to get you comps, to get you in touch with city planners, with the mayor, to see whether what you want to build is feasible. Your architect and designer, take that from you there. Yeah. They're going to be your next critical team member, because they're going to evaluate the zoning bylaw, building code. They're going to do your highest and best use analysis. And they're essentially going to design and plan and manage the entire development process. They are your right-hand man. They're the ones, and okay, maybe I'm a bit biased, but they're the ones who are going to be leading the charge for you. You handle the money, you handle putting the deal together, they take everything else. Your engineers, those are the brains behind the workings of the building and the site. Civil's first one you hire, because you got to understand, is there capacity, sewer capacity, how are you managing your stormwater, how is your How many, how's your hydro getting to site? These are critical questions. They'll do your grading plan. These are the initial focus when you're going through your review with the city. Those are the questions they're going to answer. After the civil, then it's structural, mechanical, electrical. Oh, and I forgot to mention geotechnical. That's a big one. When you're doing a Part 9 building, so small residential, geotechnical is like you don't necessarily need it. But when you're going bigger, you need to know that your soil has bearing capacity. You need to know where your water table is. Because if you excavate down and penetrate that water table, it's like a geyser. The water doesn't stop. It keeps coming up. And then you got to pump that out. And you got to keep pumping it out. And you keep pumping it out. And then you got to basically build a raft. You don't want to do that. You don't want to do that. It's very expensive. So do your geotechnical. Price range between 5 to 15,000, but it could save you millions. Mechanical, electrical, that's your HVAC systems, heating, cooling, ventilation. Very important for comfort, occupant comfort, and hitting those CMHC points. And then structural keeps the building up. Pretty critical. Next is your general contractor and your builder, and this is where I see a ton of issues. There's a big range of people who are qualified versus who call themselves contractors, and everyone wants work. You'll have people putting in low bids, and you'll be tempted. You'll say, "Oh, that's a great price. Look at all the profit I'm going to get." You sign with them, and then, "Oh, you didn't have this in your drawings. Oh, there was a pipe we didn't see. Oh, we didn't budget for that." And cost. And you look, in fact, that custom home we did, we hired someone who was came recommended as a tiler, and he completely botched a job. It cost $25,000 just to rip up the work that he did. So that put us in the hole close to 50 grand because of shoddy workmanship. And we were on a schedule, so we had no choice but to pay that. Maybe we'll go after him later, but that's expensive, a long and very stressful process in its own right. So make sure you're hiring the right people from the start. And even that, we do extensive due diligence on everyone. Like, I was walking the site of a potential contractor for that townhouse development, a guy who wants to put money in our deal, and he took me to one of his sites, and it was a mess. There was garbage everywhere. And I asked, "Okay, where's your health and safety binder?" They couldn't find it. Okay. If the ministry shows up, and they will show up out of the blue and say, "Okay, I need to see your health and safety binder. Why isn't the permit posted?" You get fined. And yeah, maybe it's the contractor's responsibility, but it's your project. They're going to come and fine you as well. Don't want to deal with that. So make sure you're hiring someone, and you look at their sites, and you ask around. You find out the work that they've done. Has it been done with minimal headache? Have there been complaints? Are there lawsuits? And are they well capitalized? Especially if they are taking the brunt of the risk. If they're going to be supplying the materials and then you're paying them after, well, a lot of contractors will get big discounts on that material and they're making up the difference. But if they run out of money and they can't buy the materials, that's it. Like, the project is stuck. They're going to ask you, "Hey, can you front me this cash?" The bank's not going to do it. The bank follows a very strict process. Your architect, the contractor has to apply. They have to apply for payment. The architect has to review it and sign off. Yes, everything is here on site. Yes, check, what you're asking for makes sense. They send that certificate off to the lender. The lender might choose to send their own consultant out to review it before they then issue your check. If the contractor hasn't completed the work, they're not going to write the check. So if you need to pay them so that they can order their material, it's coming out of your pocket. That's a very quick way to lose all your money. And the contractors, in the past, there have been contractors who take that check and then disappear. And the project is sitting there. You're paying out of pocket, carrying costs, your loan, your mortgage, and nothing's getting done. And now, you're running out of money. That's a very big risk. So vet your contractors well. You want to work with lenders who work with developers, and they know how to do it, and they have flexibility as well. You get into trouble, your lender needs to come through for you. So work with good ones. Real estate lawyer, they're going to be your ace in the hole when you need to send a stern letter to someone to pay up or to get the work done. That's who you're sending it through. Accountant, financial advisor, they're going to help keep tabs on all the inflows and outflows of your project. Make sure that you're cash flowing and you're managing your cash flows well. And key investors, they're the engines that drive these projects. We can't do any of this stuff on our own dime. We're not big enough, but also we don't want to. We like working with people and making and growing wealth as a community. And there are certain key investors who have helped us to do that. They're the ones that we look out for. They're the ones who we're trying to make money, and when they make money, we'll make money. And lastly, mentors, really good mentors. We worked with one for many years. I'm between one now. I would love to find a new one. But you want to stand on the shoulders of giants. You want someone with proven experience, has insight, that can guide you through the process. Financial market expertise, you need to learn underwriting and how to do it properly. You need to know the nuances, right? You don't know what you don't know, a mentor will know, and then he'll tell you, and then you'll know, right? You don't get into trouble. Access to their networks as well. They'll put you in touch with the good contractors. They'll put you in touch with the consultants, maybe even some investors, unless they need them for their own projects. But a good mentor will connect you. And then someone with integrity and accountability. Obviously, there's a very deep relationship that you form with a mentor. There's a power imbalance as well. So you want someone who is a genuinely good person, offers honest feedback, shares lessons learned, keeps you on track. The next piece of advice, master the financial model. I strongly, if you can't do Excel spreadsheets very well, find someone who can. And then we're constantly working on our pro forma model. It's never done. We're always adding new features. We're always updating things because of this Rubik's Cube that is development. We're trying to create a crystal ball so that we know where our project's going to end up. And we're trying to do it in an Excel spreadsheet. If you download someone else's, you don't really know how legitimate it is. You don't really know if their formulas are working, if they missed a key piece. And you have to be able to present this to clients and lenders and investors yourself, so you should know your numbers and you should know the inner workings of your pro forma model. That's my partner Graham's job. He's an Excel spreadsheet wizard. I just pretend to be one. Invest, and the last option, it's a big headache being a developer. If you don't want to be a developer, but you love the returns, you find a really good one. You find one and invest with them. Even if you do want to get into development, maybe this is your first step. You get to be an investor on the project. You get access to backroom meetings. You get to understand the process of the development without actually doing it yourself. And then you get to see the returns and pitfalls along the way. And you start emulating it. And my investors can call me at any time. They pick my brain about design. They pick my brain about projects, right? It's a relationship. So finding a good one, investing with them, gain that exposure, that's another great option. I'm going to leave you with a couple more thoughts. So the law of development, plan for the unexpected. Murphy's Law is in full effect. Something will go wrong. It will go wrong. So you have to have the mental fortitude to deal with it, to be adaptable, and to work collaboratively with your team to problem solve. One of the reasons I hated my job as an architect was because the first thing that goes wrong, my client's like, it's your fault. You're the architect. How were you not knowing that there was a pipe underground, right? You should have ordered someone to go and check. This is just what happens, all right? You don't know what's under your feet. I'm not a savant. I can't predict everything. What I'm really good at is problem solving. We found a pipe. How do I work with my contractor to deal with it? What's the most cost-effective way? Oh, you've got someone who can clear it out? Okay, great. Oh, let me find out from one of my clients. Maybe they have someone who can get rid of it. Oh, I've got a connection at the city. I'll call them up. We'll shut off the water. We'll get this dealt with. Okay, it's not the end of the world. Take a breath. Something, a hurdle comes along your way. You work with your team to leap over it and move on. And that's ultimately your team's responsibility. It's to adapt and respond, and that's what's going to determine your project's success. And of course, backup plans and buffers. Build that in from the start. 5, 10, 15% contingencies, escrow reserves, cash on hand. Build that into our model from the start so that when things do wrong, we've got cash to work with. So to conclude, Ontario and Canada's housing need is critical. The supply-demand imbalance is still there. There's been a lot of alignment now with the market and policies that are coming down from the levels of government to build. Development isn't easy. There's a big risk, but there's also a big reward. And the key is careful planning and resilience. So now is the time to lay the foundation and build true wealth when it's made through you in the proper processes. So that's my presentation. If you've got questions, happy to take them. Yes?
Yeah, thank you very much.
Yeah.
Awesome, really great learning. And this is a very rewarding, like you mentioned earlier in your presentation, but also very risky. And the initial outlay could be significant as well. So I'm wondering, will REITs, real estate investment trust, be an alternative investment, let's say, for newbies
Oh, yeah.
who want to get into development? Then since you're an architect, who practices in Ontario, maybe I'll also ask you this question. Why is it that the dimension of homes in Ontario is typically or usually smaller compared to places in the States like Texas, right? I've often wondered, like, you see new buildings, maybe the newer ones are quite bigger, but typically they are always just very small to a large extent. What's the reason for that?
Yeah, so I'll start with your question about, are REITs a good way to get started? If you want diversification, REITs are like a mutual fund, but for real estate. You're not going to get the details, like you can request their decks, you can request the info of the projects, but you're not going to get a behind the scenes look into how it's actually operating, because there are multiple layers to a REIT. At the very bottom is the boots on the ground. Then there's usually a broker in between. There's a few companies that then form like a fund, and then the REITs are the ones who are buying up the investments in the funds. So you're not really going to get that exposure, but it's a great way to diversify if you're heavily invested in tech stocks, for example, and I think there's an AI bubble coming. So if you want to get out of that and put it into real estate where you've got a hard tangible asset, a REIT is a great way of doing that without having to go through the hard painstaking tasks of finding properties and doing it yourself. So your second question, which is why are homes so much smaller here? There's a lot of factors. So the southern United States has access to, typically, I don't know how it is now, but they had access to very cheap labor coming up from Mexico. They had a huge boom. There's lots of trades. They get concrete and drywall very easily at much lower costs down there, which is why, like in Florida, all you see is concrete and concrete block. Very easy access to concrete there, and it suits their weather. Texas, they've got, I think they do have lumber coming in from California, but they actually import a lot of lumber, or at least they used to, from Canada. And they've got bigger homes because they had big lots, they lower cost of land, you can build bigger. Developers, there's just more margin. Here in Ontario, land costs are very high, construction costs are very high. Access to labor, is very slim. There are only a handful of concrete guys out there, and most of those concrete contractors, they really love the federal projects, municipal government projects, because they pay. So to the point where if you're in the middle of a concrete pour, but then there's an emergency on a federal site, they're gone, right? And you gotta wait. You gotta wait for them to finish up there before they'll come to you. Right? So all of this has been adding slowly to this current housing crisis that we're in. And that's why houses get smaller, right? less material, less time on site, less labor involved, smaller houses, but the costs go up because you need to have margin built into it.
Awesome, thank you very much. Then just one, if you would indulge me. You said something earlier about the market uncertainties and how that is creating opportunities for investors like you.
Yeah.
Do you foresee a real estate crisis? With the backlogs of construction.
We're in a crisis.
We're already there.
Yeah, we're already there. Like
the big 2008 type of crisis is what I'm saying.
Oh, like the crash. Yeah. So what we're experiencing now is our bubble deflating. So it's not a hard crash. And I don't expect there to be a hard crash because, as much as you hate the government and what they're doing, this is pretty soft. Like the US crash was devastating and it was abrupt and people were losing their livelihoods. Right now, we're just feeling a lot of pain. It's very painful, but it's slow moving. Costs are leveling out, prices are coming down because they were unsustainable. We're going to hit a point where, that demand requirement and the costs, that they'll reach an equilibrium. And then we'll probably stay there for a little bit. And then when something changes, the economy takes off, Trump, reverses all the tariffs, investment dollars start flooding back into Canada, we'll start to see things go up again. But hopefully we'll have the policies in place so that it's not a steep climb, it's more of a steady growth, right? That's why, governments want to maintain a certain level of inflation. They keep saying that 2% target because inflation is actually very important. Inflation, limits debt, that reduces your debt, and we're very in debt. And as real estate investors, we get into a lot of debt. So that keeping that small growth that's consistent and stable is actually very beneficial for the overall economy and growth because it's predictable. You can't, when markets are doing this, you can't predict, you can't plan ahead. So that's where I foresee us going. It's going to go down. Maybe we're at the bottom, maybe we still have a ways to go. We're not going to experience a devastation of the 2008, but we're still going to hit that low point where things kind of bottom out, and then we'll start going back up. That's the real estate cycle. That's investment. Things go up, things go down. Yes?
Thanks, Sam. That was very good. I have two questions. First is just development as a market sector or an industry. What are the profit margins like? And second is, can you just talk about development charges?
Yeah.
So much in the news about it. What do you see
Yeah.
on the ground related to development charges?
Yeah, so margins typically are pretty thin, but because we deal with such big numbers, the numbers are big, right? So on our best projects, we're looking at 25 to 30% margin, maybe higher, a little higher, which is decent. But you're not looking at like 100% where you in some retail markets, right? I don't know if you watch Dragon's Den or Shark Tank, but they give, here's our production cost. It's like 50 cents and we're selling it for $3. We don't have that sort of margin because we're the end point of a supply chain from extraction of material, raw material, through the manufacturing of the building products to the point where we actually put them into our buildings and then we sell, right? There's margins that are built into each asset class, and those margins kind of get squeezed to the very end. But that's why we do things big at scale with a lot of money, and that's how we create, that wealth. Sorry, you had a second question. I'll get to you in a sec. Development charges. So development charges, the history of development charges is interesting. They are basically introduced to fund infrastructure growth, right? Those sewers that I mentioned that the city's bringing, someone's got to pay for them. People don't like having their taxes raised, personal income tax, property taxes raised. So they figured out a clever way of getting that funded is to charge developers. And as they, development charges used to be small, like 10%, maybe less, but they soon realized that these politicians and their constituents, they got very angry if taxes were raised, but if the developers' taxes are raised, they didn't give a hoot. So they kept piling on those DC charges, and I think they went up a crazy amount, something like 1,000% over like 10 or 15 years. And now we're starting to feel that, because those costs get passed on to the end user, right? So, finally government is saying, ooh, geez, how do we make things more affordable? Well, why don't we reduce our development charges? And it does help, because those DCs, they represent between 30 to 40% of the price of a home. That's pretty significant.
30%.
Yeah.
Nice.
It's huge, because you've got development charges, you've got parkland dedication, community benefit tax, and then, until recently, you're paying HST on everything. So they've been cutting that down. There are some smaller charges that they sneak in there as well, depending on the municipality, but it really piles on. Even some municipalities charge we've got a minimum parking count requirement. But if you don't want to have that many parking units, you can just pay us $8,000 a spot that you don't have. All right. Lots of creative ways of milking the cow and putting that in your coffers. And then all the spending you're doing on the other side, you can kind of hide it with these developers, these greedy developers who are footing the bill. Well, guess what? Now those projects don't work anymore, housing's not getting built, and your constituents are complaining that things are unaffordable. So, they see the light. They're starting to make cuts. It does help.
So in Waterloo region, what are development charges at presently, like a range?
I don't remember off the top of my head. I think it's something like 27,000 a unit for a multi-bed. It might be a little less for one bedroom and studios. It's on the per unit. Yeah. So you had a question?
So, Samuel, thank you. It was a very wonderful presentation and very informative and educational as well. Now, my question would be is, do you teach? Do you educate how to become a better developer and course-wise?
I don't have a course. I have friends and colleagues who have courses. There's one over there. He's got a course on construction. Would be great. Talk to Adam after during the networking break. I'm always here to share my knowledge and wisdom. I'll if Andrea will have me back, I'll keep doing more topics. Yeah.
And second question sorry.
No, go ahead.
Does the government provide little subsidies for low-income housing?
Yeah.
Developments and all that?
Yeah, there are programs out there. The ACLP, which is the Apartment something Development Program, they have, it's kind of like CMHC financing where you get better terms on loans, but your qualifications, they do 30% have to be affordable, and there are grants and stuff out there that help. We still don't quite see the business case of affordable housing without that government input, right? It's still too expensive to build.
Thank you.
Yeah. Yes.
Hi. So, first of all, thank you. And second thing is, you mentioned about the modular houses.
Mm-hmm.
Just from my recent, just roaming around, Kitchener, Waterloo, and Cambridge, I actually came across, there is this community in Aberfoyle near Guelph.
Mm-hmm.
There's a lot of modular homes that I have built, and then it is also near Puslinch, where they actually kind of have those modular kind of homes built in near small ponds, where they actually make it like a small community and things like that. So why is there a trend in modular homes, and why is it kind of people do want to go towards modular homes?
So modular homes have been around for a while. They're factory built, using conventional materials, wood, steel, right? You're building it in a conditioned space, very easy for trades to work in. Your wood, wood absorbs moisture, and it twists and bends as a result, it expands and contracts. You don't have that issue in a shop. So it's very dimensionally stable. And so that helps expedite the construction, because you can literally do the full unit, inside fit outs, cabinetry, plumbing, everything, and then a truck picks it up and ships it to site. So your time on site is kept to a minimum. Like, all you need to do is your site works, plumbing, foundations, and then these things can go in. So this project here, we're going to be doing entirely out of modular. And the great thing is the codes now allow us to stack apartments, and I think we can go up to 12 stories using a steel system. But what this allows us to do, typically a project like this, 2.5 years, right? We can get that down to 12 months. And the bulk of that is the site stuff, and then the roof, which has to get a finish, and then little tie-in details, right? But that's a huge savings, because that cutting that time on site in half, all your carrying costs are reduced. All of these units come pre-certified, so you don't need to line up inspectors. Like a big delay on some of our sites was, okay, we got framing done. We'll call up the inspector, hey, can you come take a look? I'll be there in a week. Because he's busy, right? But that delays our project by a week. You do that framing, drywall, like insulation, vapor barrier drywall, like that adds up. And that's coming out of your pocket. We've completely eliminated that now, because they're stamped, they're CSA approved. So get our building permit, we're good to go. We'll do one concrete foundation inspection, and then boom, 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 all the units get stacked, and we get our occupancy permit. Easy peasy.